And Stacy kind of hit with an antitrust accusation, and the stock market snores.
Well, you got to remember, they're not selling anything in China right now.
Not yet. They want to.
They want to. And actually, the reason they're not selling right now, it is because of the China side. The U.S. seems to be getting a little more flexible on that. It's sort of unfortunate because, supposedly the antitrust piece that they violated was that they weren't selling. They had promised post-Mellanox to make sure they kept selling into China, and they haven't been. Of course, it's not their choice. It was on the U.S. side in that case, was not allowing them to sell. So they're sort of stuck between a rock and a hard place, I guess. But to be honest, I don't know how serious this really is. I mean, they're in trade talks right now, as you were talking about. This feels to me just like one more like chess piece on the chessboard being moved. I don't know how serious it actually is.
Okay, so let's use your analogy. Is it an analogy or metaphor? I can never remember. Let's use that example. How about that, Stacy? Fail English. All right, here's the thing. In chess, there is a goal. That goal is checkmate, right? Is to beat the other. So if this is a chess piece, as you say, what is the goal?
Yeah, again, this is a whole other thing because I don't know how much our administration is playing chess or checkers or whatever. So I don't know. At the end of the day, I mean, look, NVIDIA wants to sell into China. That's correct. And I'll be honest, I think there's a lot of demand in China for NVIDIA's parts. So I actually think the Chinese customers would like NVIDIA to be able to sell into China. China right now is flexing everything that they can to bring to bear around some of these trade talks. This is one lever that they may have. They did some other things today too. They launched an anti-dumping investigation into the analog space. So again, wherever they can at least, in some sense, try to influence some of the outcome and apply at least a little bit of pressure, they're doing everything they can. I think part of the issue, at least in semiconductors, is that there's not a lot that they can do. Like they don't really have, because of some of the things that have occurred, they don't really have a leadership position in most of these areas in semis. So wherever they can, I mean, they'll try to grab it, but there's not a ton that they can do at this point.
Yes.
So we'll see what happens. I don't exactly know what the goals are on either side at this point.
We'll see. And I'm sure there's I tried the Simpson quote from Ralph Wiggum. Maybe there's something related to NVIDIA in China. Who knows? But either way, Michelle, there is some goal here. And China wants the chips, but they probably also want to flex and show they're not just going to be pushed around. I feel like the TikTok, again, analogy, metaphor, I can't remember which is which. This is symbolic of something larger than just NVIDIA and some company, Mellanox, that nobody's probably ever heard of.
It's definitely symbolic of something much larger. I think TikTok represents this issue, is emblematic of the relationship between China and the United States, because so many of the concerns expressed by members of Congress here are about national security. And that's been the overarching discussion that we've had. When it comes to TikTok, are they using TikTok implanted in people's phone to follow people around, to know where they are, to spy on them? They did that.
Well, answer your own question.
Well, but they did that when they were trying to figure out who was the mole in TikTok that was speaking to reporters. They started monitoring where reporters are doing. Chinese executives did that back on the Chinese mainland. So that was a concern. What about, are they using the algorithm to, have malign influence on Americans thinking about the United States and positive thinking about China? These are all things that we think about. We think about the national security relationship with China very deeply here in the United States.
Stacey, quickly, what is the next market-moving event for NVIDIA stock? What's the next major thing that you were following?
Yeah, I mean, so you've got earnings and everything else. I mean, they just reported earnings not that long ago. What we're really looking for, at least for this year, I guess is two things. One is the magnitude and trajectory of their rack shipments as they ramp their Blackwell Ultra, their GB300 parts into the end of the year next year. Look, we're also waiting to see if some of these licensing and other issues around their ability to do business in China do ease, because again, they have zeroed it out from their numbers. So anything they get from China in the near to medium term is upside. And I guess as you go forward, they've got their GTC event, which will be in March of next year. It's not that long, 6 months from now, where we'll probably get a lot more color on their next generation product, which is called Rubin, which is supposed to ramp in the second half of next year. So we'll probably learn a lot about that in the first half of 2026 when they have that event.
NVIDIA is renowned for producing top-notch GPUs. Because of their processing capacity, GPUs, which were first utilized for gaming, later became popular among cryptocurrency miners. These days, they are essential to AI creation and training. NVIDIA began as a graphics processing-focused gaming startup in 1993. In 1999, the year the business went public, it would design the first graphics processing unit, GPU. NVIDIA is now a major player in artificial intelligence, AI, and has recently played a part in the cryptocurrency market. Less than 10% of its revenue comes from gaming. The change has made NVIDIA the biggest firm in the world and shows how good companies can adapt to the newest technology advancements. The success of NVIDIA is attributed to its GPUs, which are semiconductors with the ability to process data in parallel, dividing complex jobs into smaller ones and managing them all at once. NVIDIA GPUs were first designed to speed up video game graphics rendering. Microsoft was one of its most well-known early customers. The original Xbox made use of the NVIDIA GeForce 3. When NVIDIA introduced Compute Unified Device Architecture, CUDA, in 2006, a technology that allows GPUs to employ parallel processing for purposes other than graphics, the company made a significant advancement with their GPUs. Developers can code and create applications on NVIDIA's GPUs with CUDA programming. CUDA offers faster processing and more efficient use of computing resources since it integrates parallel processing. NVIDIA did not immediately have success with CUDA. Nevertheless, NVIDIA made a significant investment in it, which would ultimately pay off handsomely. The introduction of Bitcoin in 2009 marked the beginning of the cryptocurrency market. Additionally, Bitcoin invented the proof-of-work method, which verifies transactions. Anyone interested in participating might download the code for Bitcoin and use a computer to solve cryptographic puzzles. The fact that the problem was solved was evidence of the computation work being done. Bitcoin was first given as a prize to devices that resolved issues. Initially, users used their computers to engage in what is known as Bitcoin mining. They began mining Bitcoin and other cryptocurrencies using NVIDIA GPUs after quickly realizing that more potent processing equipment would boost their revenue. The demand for GPUs surged as miners discovered that they could make even more money by connecting numerous GPUs to the same motherboard. There is some criticism around NVIDIA's involvement with cryptocurrencies. In 2018, a class action lawsuit was filed by investors who claimed that NVIDIA had neglected to reveal that a significant portion of its GPU revenue growth came from cryptocurrency mining. In 2022, NVIDIA settled charges related to the case with the SEC by paying a $5.5 million fine. However, the lawsuit is still pending. Because GPUs aren't a competitive way to mine Bitcoin or other cryptocurrencies, crypto mining no longer accounts for a sizable piece of NVIDIA's business. Application-specific integrated circuit, ASIC. Miners with significantly greater processing capability are now available. GPUs are still used by some hobby miners, while ASICs are used by those who wish to earn money. Demand for NVIDIA GPUs was driven by cryptocurrency miners, but AI technology allowed the company to develop even further. In 2011, researchers began utilizing NVIDIA GPUs to build AI. A year later, Alex Krzyzewski trained a neural network called AlexNet using CUDA and NVIDIA GPUs. It demonstrated the efficacy of GPU-trained machine learning models by winning the ImageNet image recognition competition. The creator of ChatGPT, OpenAI, received a supercomputer with 8 GPUs from NVIDIA CEO Jensen Huang in 2016. Another indication of the strength of NVIDIA GPUs was the enormous success of ChatGPT when it was first released in 2022. NVIDIA's contribution to the AI revolution has produced amazing financial outcomes. For 9 straight quarters, it has recorded sales increase of more than 50% year over year. Its most recent revenue for the second quarter of its fiscal year 2026, which concluded on July 27, 2025, was $46.7 billion. Of total, 88%, $41.1 billion, came from data center revenue, which includes business AI spending. $4.3 billion was made from gaming. Few people were aware of NVIDIA's transformation from a gaming firm to a significant force in the AI and cryptocurrency industries. Its narrative illustrates how businesses with significant competitive advantages, in this example being the leading GPU company, can turn into extremely lucrative ventures. Due to its extremely low payout ratio and significant reinvestment requirements, NVIDIA intentionally pays out a very little dividend. The chip company's capital returns are centered on buybacks rather than dividends, and the authorization recently received a significant boost. The dividend can increase over time without limiting growth investments if earnings keep compounding. NVIDIA is more than just the top producer of artificial intelligence, AI chips, after a spectacular run over the past 2 years. It's also among the largest tech cash machines. The firm creates and markets the networking, software, and graphics processing units, GPUs, that enable generative AI inference and training for cloud providers and enterprise data centers. In the midst of all the discussion about growth, investors frequently pose the straightforward query, what about the dividend? The quick answer is that NVIDIA does have a dividend, but it is purposefully little. The yield rounds to almost zero, but management increased it during the 2024 stock split and has maintained it at this level ever since. That is not a flaw. Rather, it is a reflection of a capital allocation strategy that emphasizes opportunistic buybacks and reinvestment as earnings grow. The why, how, and next steps are explained in the sections that follow. The current quarterly dividend paid by NVIDIA is a meager 0.01 per share, or 0.04 per year. NVIDIA's dividend yield is 0.02%, which is obviously insignificant considering the stock's current trading position. The distribution has remained at that rate since May 2024, when the business last increased it by 150% in conjunction with its 10-for-1 split. Naturally, a dividend this modest indicates that the corporation is barely using its earnings power. NVIDIA made about $3.51 per share using trailing 12-month earnings per share. That suggests a payout ratio close to 1% when compared to an annual dividend of $0.04. To put it simply, NVIDIA is giving out around $0.01 of every dollar it makes, which gives it a lot of leeway to finance expansion and eventually increase the dividend. However, don't be fooled by NVIDIA's meager dividend. Though in a different manner, the business is giving stockholders large cash returns. Share repurchases are NVIDIA's main method of cash return. The company's buyback authorization was increased by $60 billion by the board in late August 2025. Additionally, NVIDIA returned $24.3 billion through dividends and buybacks in the first half of fiscal 2026 alone. As of the second quarter release, the company still had $14.7 billion left under the previous authorization, prior to the addition of the new $60 billion. As free cash flow rises, the IT company has developed the practice of regularly spending billions of dollars on repurchases every quarter. From this point on, dividend policy will probably be influenced by two factors: earnings power and investment demands. The business is currently in dire need of funding as it expands AI systems like Blackwell at an astounding rate. Because CEO Jensen Huang appears to be quite optimistic about the company's development prospects, the company is likely to continue repurchasing its stock in addition to aggressively reinvesting in its operations. Investors should therefore anticipate that buybacks will continue to be the favored method of distributing capital to shareholders, as long as the data center cycle is in hypergrowth mode, with the dividend gradually increasing from a very low base over time. This strategy enables NVIDIA avoid making a sizable fixed cash commitment while maintaining a high degree of flexibility in the event that demand changes. Will the dividend increase over time then? Most likely. However, it's unclear when and how much the hikes will be. Furthermore, there are hazards for even NVIDIA. Export limitations have already made shipments to China more difficult, competitors are making aggressive investments, and AI spending is capital-intensive and cyclical. The company is scaling quickly enough to support both reinvestment and increasing shareholder returns, as evidenced by NVIDIA's recent results, which show sales up 56% year-over-year in the quarter ending July 27, 2025, with guidance requesting another consecutive revenue gain. Both large repurchases and modest dividend increases are still possible if earnings keep compounding. But shareholders shouldn't seek dividend hikes in the first place, as long as the company has a huge potential set. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Brendan, the timing of this is all very interesting. Of course, we heard from Megan on TikTok, and now we hear from Christina on chips. And does this suggest to you that maybe China is trading TikTok for chips as it pertains to just the geopolitical balance between China and the U.S.?
Yeah, these are pawns on the chessboard. I think a few copies of Art of the Deal got sold in China. If it's Boeing airplanes, soybeans from the Midwest, these are things that from the China side, and then you have rare earths. So they're just applying pressure where they can. We saw this with the U.S. threatening tariffs on Russian oil. These are just they're applying pressure. The two sides, hopefully the two leaders work it out, and we see a Trump-Xi summit this year.
I mean, you have both parties, as you lay out there, kind of creating new leverage points. Where does that ultimately net out relative to where we started?
I mean, ultimately, the U.S. and Chinese economies are highly integrated. So I think you don't this decoupling idea. I don't think it's going to happen. Certainly, you'll see strategic industries focused here in the U.S. But big picture, there's a lot of cheap stuff coming out of China that U.S. consumers want. They want U.S. airplanes. They want NVIDIA chips. And I think they're willing to concede things like TikTok, provide rare earths, magnets to the U.S. And so I think it's just more some of the rhetoric dies down a little bit. And I think that allows corporations to do what they've always done within the U.S. and China, which is get along quite well with one another.
Are you surprised, going back to TikTok, that the Chinese would be willing to let the algorithm go to U.S. owners? I mean, that was something that was such a sticking point for years now. And it was something that, from a national security standpoint, the U.S. was adamant about. Do you think that all along it's essentially been a pawn, or do you think it's something that China was just kind of conceded that really it's chips that they're focused on and an algorithm is an algorithm?
I think the latter. I think big picture, you go on to ByteDance.com and you look at About Us. 60% of the shareholders of ByteDance are people who hold U.S. passports. I mean, this is U.S. and global private equity. Who's invested in those private equity funds? Your alma mater, your local foundation, your local pension. To make that a zero hurts the interests of the U.S. interest in ByteDance, in TikTok. So I think that's why you find a solution that works for both sides.
Are there other kind of names in the sector in China that feel like they're a little bit less exploited already? In other words, that are playing on the big trends, whether it's AI or something else that you would focus on now?
Yeah, I think obviously you're seeing this re-rating in Alibaba coming out of their August to talk about AI and the benefit of their cloud business. At the same time, we really like some of the smaller names. You have a Tencent Music, the Spotify of China, this company Bilibili, it's online video, Kuashu, which is another online video company. These are names that are a little bit under the radar. They're going to be pretty volatile, but I think it's part of the reason we like this basket approach. Obviously, it's self-serving and highly biased with K-Web, just because the e-commerce has really struggled with some of the restaurant delivery war. Hopefully, some of this anti-involution is applied to e-commerce like we're starting to see in auto and solar, which actually does address U.S. overcapacity complaints.